couldn't enact it via our software. So we're going to start with the basics. So I know some of us have already been in VITA programs before, so you're already familiar with how all this works, including probably TaxSlayer itself. But we're going to start, for those of us who haven't had the benefit of prior experience, with some basic 101s. So tax terminology. If you want, there's paper copies of this. Yeah. So one of the things that is incredibly helpful for us to understand as tax preparers is, what are we saying when we file a tax return with the IRS? What argument is this actually making to the IRS? What is a tax return? A tax return, at the end of the day, is a formula with a whole lot of variables that we then solve in order to figure out what someone's tax refund or tax liability is at the end of it all. How much someone owes, how much someone is supposed to get back. How does this work? Well, I'm going to run through this listing top to bottom of tax terminology. And it is in this particular order. The reason that I have given you this as one listing top to bottom is because a tax refund has an order of operations just like a math equation. Just like PEMDAS, we get taught in primary school, tax terminology goes in this, or a tax return progresses in this order. Of note, I actually disagree with the way that TaxSlayer arranges the tax return. TaxSlayer will start you in filing status. I personally view that as, no, that's the second step. You need to determine dependency first. Can this taxpayer be claimed as a dependent? Can this taxpayer claim other dependents before you can really get at filing status? So you start with dependents. Can this taxpayer be claimed? Can someone else claim this taxpayer? The most common one, obviously, is a parent claiming their child as a dependent, but there are some less common options out there as well. We'll get into that in a little bit. Once you've determined who can claim whom, or who can be claimed by whom, then you move on to filing status, which is very broadly just what are the broad buckets of life circumstance that this taxpayer falls into. So there's a couple different ones in order from best to worst. There is, generally speaking, best to worst. There is married filing jointly. There is qualifying surviving spouse. They've changed the name of it to be gender neutral now. It used to be qualifying widow, qualifying widower. Now it is qualifying surviving spouse. What that means is your spouse died and left behind you and the kid that you had together. And people who qualify for qualifying surviving spouse basically get the benefits of married filing jointly for 2 more years. Then there is head of household, which is not quite as many benefits as married filing jointly, but many more benefits than single filing status, because that's the next filing status, single. Single is just kind of your neutral default filing status. If you don't fit anything else, you're in single. And then at the very tail end, in general, the worst filing status to have is married filing separately. Married filing separately gates you off from a lot of different benefits and usually has the worst eligibility thresholds and eligibility criteria, but it is technically still a filing status. There are exceptions to the general rule about which filing statuses are better or worse. So, like I said, generally speaking, married filing jointly is the best, and married filing separately is, generally speaking, the worst filing status out there. But I've had a coworker who always filed married filing separately. Why? because she had student loans. She had Mongo student loans from getting her master's in social work. And if she filed married filing jointly, the student loan company would see that income of her spouse and say, oh, you can repay a lot more now, can't you? So she always filed married filing separately so that their incomes would stay separate and her student loan payments would stay nice and demure so that she could finish out her 10 years of public service and then get them forgiven. So in her specific case, it was better to file married filing separately. I actually did the math for her once. And yeah, married filing separately was the way to go. So once you've determined the filing status, your general bucket of life circumstances, then we recognize that we're talking about a federal income tax. So it's got something to do with income, I guess. So now we need to add in income to the formula as the first numbers that we tap in. And income is split into two types of income. There is one, the earned income, and the unearned income is the second one. So what's the difference here? Well, earned income is money that you got for work or work equivalents. It is, in general, the stuff you'll get from your employer or from being self-employed, earning money by doing work for other people. There are some equivalents to earned income, which can still count as earned income even if it's not even if it's not technically working. The best example is disability income. Disability income will often show up as a code 3 on a 1099-R, which says, hey, this income is being received in lieu of wages because you are considered disabled. And so that is considered earned income because it's, you aren't able to work for a living, so this is your earnings. After you get an earned income, there's also unearned income. And that's just simply, it's stuff that you are not yourself directly working for. Your money's working for you, so you're getting capital gains income. That's a type of unearned income. Gambling winnings would be another example. As difficult as some of the gambling games can be, like you win a poker championship, you're pretty good at that, but.
With a professional gambler, you're saying was it a Schedule C? How does that work with, I guess that's out of scope.
Yeah. When they go pro, that a different set of rules applies to them. No, but if I'm just heading up to WinStar and dropping a bunch of coins and somehow I came out on the positive, no, that's unearned income. But you have the difference, and then they get totaled up into your total income. But Teddy, here you're asking, why does the difference matter? Well, we have certain credits, especially, that pay attention to your earned income. Like, for instance, the earned income tax credit might have some relation. So they pay attention to specifically how much are you working. The earned income tax credit can be conceptualized as a bonus for taxpayers who work hard, but still aren't able to make ends meet. So if you have a bunch of earned income, but your family's income still ends up being like 30,000, and you're trying to support 2 kids, yeah, you're going to get a chunk of about $5,000, $6,000 back, because the federal government looks at that and says, man, if anyone could use the help, it's you, because you're working so hard and still need more money to make ends meet. So that's why the difference between earned and unearned income. So total income, that's got to be super important, right? It's the total amount of money that you got throughout the year. Nope, not important at all. It has almost zero bearing on the rest of the tax return. Nothing, virtually nothing in the federal government actually refers to your total income. There's a few things here and there, but for the most part, they ignore it. Why is that? Well, because after we get the total income, now we apply adjustments to your income. And broadly speaking, adjustments to income can be conceptualized as money that you had to pay in order to get your income in the first place, or money you had to pay in order to work. So examples of adjustments to income include the $300 allowance that primary and secondary school teachers are allowed to take because they're spending that money on school supplies for their classrooms. Like, that is an adjustment to income. There's plenty of other examples, but that's the one that always comes to mind most. It's money you had to pay in order to work, and therefore it gets subtracted from your total income. And the result of that subtraction is your adjusted gross income, your AGI. And where total income was pretty much completely ignored by most of the financial world, the AGI is referenced everywhere. The most important number, frankly, on your tax return is probably your AGI, your adjusted gross income. Most credits, most things refer to that. All the government benefits programs will reference your AGI instead of anything else. The FAFSA references your AGI or your parents' AGI. Cool, so then your AGI is what you get taxed on, right? No, not yet, not yet. Once you've taken away the money that you had to pay in order to work, now the government gives you the opportunity to take away the money that you had to pay in order to live. And that's your deductions. So again, if adjustments can be conceptualized as money you had to pay in order to work, deductions are money you had to pay in order to live. And deductions come in two different types. You have your standard deduction and your itemized deductions. So your standard deduction is the number that is reached by some arcane formula where the federal government just says, or the IRS says, well, someone in your general lot in life, in your general life circumstances as defined by your filing status, will probably spend around this much money plus a little extra every year just to live. So you know what? You can take that much money and just subtract it from your income for purposes of taxes, no questions asked. Just take that much money off and we're not going to worry about it. And so if you pick your standard deduction, you do just that. You subtract that standard deduction, whatever it is, from your AGI, and then all's good. Your itemized deductions are when the IRS tells you, you know what, someone in generally your lot of life spends this much on money just paying for stuff to live. And you reply, whoa, 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 no, I spent way more than that last year. Here's my receipts to prove it. And so that's itemizing. That's when you take out all your receipts to prove your living expenses over the past year, and you add them all up, and end up with an itemized deduction total. So whether you pick standard or itemized, you subtract that deduction from your adjusted gross income, and you end up with your taxable income. And that is the actual amount of dollars that you are being taxed upon. Your taxable income is then multiplied by a percentage, or in reality, it's compared to a table that is based on percentages. And that turns out the amount of tax that you owe. Now, the way that this works is the United States uses what's called a progressive tax system, and that is progressive as in characteristic, not progressive as in political leaning. This is not Bernie Sanders' tax system. This is just the first $10,000-ish of your taxable income are taxed at 10%. So 10 cents on the dollar you pay to the feds for that first $10,000-ish. Then the next tranche of funding, the next set of funding, is taxed at 12%. So your first Your first $10,000 is still taxed at 10%, but the second set of money after that, your $10,001st is taxed at 12%. I'm getting the exact thresholds wrong, but
Right.
But that first dollar and every dollar past that is taxed at 12% above that 10,000. Then, once you reach the end of the 12% bracket, the first dollar you earn after that 12% bracket gets taxed at 22%. And then past that, we don't care what the levels are because the 22% bracket extends beyond the range of incomes that we will see. So, who cares? You may be asking, there's probably some curiosity, Teddy, why is there such an immense jump from 10, 12, 22? Well, it didn't used to be such a big jump. It used to be 10, 15, 25, something like that. But the 2017 Tax Cuts and Jobs Act, the TICJA, the most uninventively titled bill ever, shifted the thresholds down by 3%, amongst a whole laundry list of other things that it tweaked and changed about the tax system. And it was the tax opinion, not political opinion. It's one of the worst tax bills that has been put out there because it messed up so many things for very little reason, and it created chaos. We lost a good 10 volunteers that year because it was such a mess. But you end up with a tax based on that progressive tax rate, based on your taxable income. Great, we have the tax, so that's how much I owe? Hope not. No, it's not. Because once you get your tax, then you get to start taking away from the tax, or you get to start modifying the tax, beginning with non-refundable credits. You start taking credits away. So credits are, it's the amount of money that the federal government says, well, because this thing happened in your life this tax year, you get to take this much money off your taxes. And based on formulas and based on all that stuff, that most of the time the system will calculate for you, as long as you enter the right parameters. So you take some of your credits, but not all of them. So why is there this difference here? There's credits appear in two different places: non-refundable credits right now, and then 2 steps from now, there's a refundable credits section. Well, there is a difference between them in that non-refundable credits will reduce your income down to zero, non-refundable credits will reduce the amount of tax you owe down to zero. But if you hit zero and you still have non-refundable credits left, the remainder is lost. It doesn't do anything past that. You can get down to zero, and then that's that. Any leftover non-refundable credits are just left behind. Refundable credits, when you hit zero, they will keep going and turn into a refund. They will turn into dollars coming back to you. So as an example, if you have $500 worth of non-refundable credits and $300 worth of tax, your $300 worth of tax get eliminated, and then the $200 remaining of non-refundable just vanishes into the ether. If you have $500 of refundable credits and $300 of tax, your $300 of tax get reduced to zero, and then you get $200 back from the refundable credits. Now, why is there the difference? It's because additional taxes slides right in between the 2 credits. Remember, this is an order of operations thing. So additional taxes comes in. What is this? Well, this is because of life circumstances, the IRS actually needs you to pay more taxes. Big examples. If I am self-employed, then cool, I'm getting a bunch of money. Well, I need to make sure that I send the federal government their FICA tax out of my payroll because, it's okay, yeah, I'm paying for my own Medicare and my own Social Security. Oh, but on a normal employer-employee relationship, my employer pays for half of the FICA tax. Except I don't have an employer. I am my own employer because I'm self-employed. So oh no, I'm on the hook for the other half of the FICA tax as well. That other half of the FICA tax is your self-employment tax, your SE tax, and that shows up under additional taxes. Another example of additional taxes that will show up on a regular basis, if someone gets their health care from healthcare.gov or the Affordable Care Act or Obamacare or the marketplace or however else someone describes it, and they end up underestimating their income for the year, then at the end of that year, they have to pay back excess credits that they received throughout the year. They have to pay back money that healthcare.gov should not have paid to their insurer. That shows up as well as an additional tax. And because it shows up after non-refundable credits, there's an order of operations. Non-refundable credits can never reduce the amount of additional taxes that you have to pay. But refundable credits can. And that's why this order of operations thing is so important. In many cases, you will get the opportunity to use the same amount of dollars and pull different levers throughout this order of operations. And sometimes the specific lever that you decide to pull makes a very big difference. Same amount of money, pulling a different lever can do some can have some very strange effects. So it's important to understand the way that these formulas work. So you take your tax, you subtract non-refundable credits, you add your additional taxes, and then you subtract your refundable credits. And then you end up with a number that is incomplete because then you have to add in your federal withholding. How much money over the year did you already pay to the federal government? Because we are required to make regular payments throughout the year on our estimated tax liability to the federal government. And most of us do that by having some dollars withheld from our paychecks to just send straight to the feds. That's federal withholding that shows up on a W-2, shows up on our pay stubs. Once you finish subtracting your federal withholding, you either end up with a final number of, it's still a positive number, like you didn't get down to zero, in which case, well, that's how much money you owe, that's how much taxes you owe still. You didn't pay enough throughout the year, so you gotta pony up a little more. Or ideally, you end up with a negative number, which is, well, actually, between the amount of money you withheld over the year and your life circumstances that gave you credits, you overpaid the federal government a little bit, so the feds are gonna return you that money. And that turns into the refund or the amount due at the end of the argument. So that's how taxes work.
Love the flowchart logic. I've never heard it explained this way. I've heard it explained several times.
A lot of accounting students. Have you heard this?
No.
I like this as well, yeah.
Okay.
I agree.
Yeah, that's simpler. That's why I started doing this, because I got feedback from a lot of accounting students about, hey, like, this is help.
Hey, in life, if you can explain the why, you've got to figure it out, right?
Exactly. This used to be incredibly important because of the way that education credits worked, when you could still, or education expenses, when one of the options was still taking education expenses as an adjustment to your income, especially. Because, like, yeah, you could choose between one type of credit, education credit that lands in the non-refundables, or one type that lands in the refundables partially. Or you could change your AGI, which, like, by taking it as an adjustment, which causes all sorts of knock-on effects when the AGI changes. So, order of operations is incredibly important. Any questions, other comments about this online? How y'all doing?
I'm just hoping the software calculates everything, but
It does. Yes, absolutely it does. The software is very, very powerful. And in fact, since we're talking about it, welcome to TaxSlayer. Yes, that is an incredibly metal name for tax preparation software. It is incredibly not metal in its execution, but it is very competent, is what it is. I don't know how many of you were, I don't know if anyone was volunteering with VITA before 2015, but in 2015, we switched to TaxSlayer, and thank goodness. Prior to 2015, we were using TaxWise, which was very good, powerful software if you knew how to do things. It was incredibly, like, there were a lot of manual overrides that you could learn that would let you basically rewrite Shakespearean works inside TaxWise. But it did not have a learning curve. It had a learning cliff with negative degree slope. If anyone's into rock climbing, negative degree is when you're actually climbing away from, and you have just negative space under you. It was rough.
You're a rock climber.
No, I just know the terminology. I'm fluent in many
It's
different.
quite very well to 13614, today and take 4.
Yeah.
So it flows.
All right, so yes, our tax software that the IRS actually gives us to use is TaxSlayer Pro. And to access this, I would like you to open up your browser of choice and go to vita.taxslayerpro.com. See if I have that listed anywhere here. No, I do not. Okay. Well, vita.taxslayerpro.com, and you should end up on this screen. What we're going to do right now is we're going to go ahead and establish you in the practice software. I'm going to show you how TaxSlayer Pro works. And then we're going to establish you in the practice software. And then using the print packet that I provided in person here and that I sent online, we are going to start learning by doing. So those of you who've done VITA before, obviously you can do this in your sleep. But for those of us who are new to this, we're going to show you how to interface with every screen in TaxSlayer Pro by using the sample scenarios we've prepared locally. So you're on vita.taxslayerpro.com. This is also the website where you're going to start in live software. During the actual tax season, this is also where we're going to start. So let me just give you a tour around TaxSlayer Pro. This button is red, My Account Login. It is red because it is a red herring. Do not click this button. That button is meant for systems administrators, basically. It's meant for people who are managing the TaxSlayer Pro system itself. Instead, what we're interested in is these 3 big buttons here. So in the order in which we are least interested to most interested right now, there's the VITA TCE blog. This will show you the blog where TaxSlayer Pro posts stuff they know about TaxSlayer right now. So oftentimes it'll be details about, oh, hey, we're shutting down this thing right now, or this is the latest patch, what we changed, problems we know going on, or if there is a situation going on, like there's a system outage, they will put a notice on this TaxSlayer blog. Honestly, as volunteers, you're not going to find much useful on the VITA TCE blog, but our site coordinators will keep an eye on this to make sure that you are informed of anything that you need to know for your purposes. Like, oh, this form is currently not working. Here's your workaround for now. Next up, Pro Online. If you click on that, you will instantly be taken to a screen where you enter both a username and a password. I'm stressing this for a reason. When you click on the Pro software, you will instantly be asked for both username and password. This is live software. If I log in right now, I will log into a live system where if I create a return, I am creating a real return to file to the IRS. Please do not prepare any practice software any practice problems in the live software. The cue that you are in live software is if you instantly see username and password pop up. What you should see instead, give you a chance to finish writing stuff. What you should see instead during this practice environment is you should end up clicking on Practice Lab instead. Go ahead and click on that. When you click on that, you will see this screen where it asks you for only a password. Whenever you see this, you can reference this, this print packet, and it will have a universal password, Train Pro Web, all caps. So you can actually type Train Pro Web into this, and it will now take you to the Practice Lab login. This is how you know that you are in the practice environment. You will have the one Train Pro Web password, and then you will get the username and password, and it will say Practice Lab in the upper left-hand corner. During tax season, please do not prepare any live tax returns inside the practice software. So, if you already have a Practice Lab account from prior VITA experience, you can log in on your old account. That is perfectly fine, and we can actually just use your old account. If you do not have an account, then you can click on Create Account. It will ask you for some information. It will ask you for your email address, your username, your password. It's going to ask for a very weird password, very long password. There's a reason for that. It'll ask you for program type. You can just select VITA. It will ask you for a site identification number. When it's asking for a site identification number, you can enter this SIDN. This is the SIDN for North Branch Library. Sierra 5601-71997.
You don't climb, you fly, right?
Also, no. I just learned lots of stuff. I worked at a phone bank for a while. I worked in a telecom phone thing where they're supporting Charter, and they had terrible phones in the field. So phonetic alphabet got very important.
For a username, does it matter what we put? Or?
You can put whatever username you'd like. So this is the second of 3 different accounts. that you are having to maintain.
What would you
At
prefer?
least.
Would you prefer somebody to use their old, something that was all cumulative, or do you prefer just to create a new thing for 2024?
I prefer you to use whichever is simplest for you.
Okay.
Because it makes no difference to
Okay,
us.
so you're not cumulatively collecting stuff, okay.
Nah. I'm uncertain whether the IRS has stuff in the back end that they use. I don't think so.
Okay,
But
thank you.
yeah. Use the username that you're familiar with, use the emails, the recovery email specifically that you were familiar with. Because this is also another, just like Link Learn Taxes, which by the way, Link Learn Taxes did flip over.
It did, okay.
Yeah, it flipped over literally yesterday.
Wow.
But just like Link Learn certification, I do not have back-end admin access to this. So if you get locked out of your practice lab account, I can't really help you any more than you can do yourself. In the live software, that's a different story. That we can work with, but practice lab, make sure you have a good recovery email on this, because I can't help you. Everyone have the SIDN that needs it? Okay. In that case, go ahead and complete this, create your account, and I'm going to go ahead and log in on my own. And if you're wondering, Teddy, why on earth did I have to create a password that had more than 16 characters? It's so long. That's because you are not allowed to create a password shorter than 16 characters in the practice lab, and you are not allowed to create a password longer than 15 characters in the live software. At least that's the way it was when I started on this. And that's explicitly to make sure that you cannot log in on the wrong account at the wrong time.
Not a hexadecimal thing.
No. So when you log in on or when you finish creating your practice lab account, or once you've logged in, you end up on this screen. Which, this screen has a lot of different elements to it. You can change your language if you'd like. There's some options if you want to mess with your account. There are actually quite a lot of self-paced videos that you can watch for self-paced learning in order to learn how to use every aspect of TaxSlayer. So if you ever have any questions about how something works that we didn't go over in class, you can look over this. But for our purposes, go to practice area is probably the most important button on the screen. So go ahead and click that. And we shall continue our tour of TaxSlayer. So the first thing I'll point out is some indicators that you may be in the practice lab, such as the big old font saying, "Welcome to the practice lab." If you see this during the live season, then you're in the wrong system, unless you're explicitly coming here. There's some big old buttons here. There's a message center where this is where TaxSlayer will send out information to people. That's where they'll send out notifications to us about things in general. There's a lot of random stuff that appears in the message center. You pretty much don't have to worry about anything in the message center. There's a section for rejected clients. It'll just pop up, hey, we have 3 rejects on this site. You don't have to worry about that. That is something site coordinators address. Validation errors, I'll be honest, that's a new one. They added that this year. And portal clients is something they added last year that we never really explored. And in theory, taxpayers now get access to can get access to TaxSlayer via a taxpayer portal. We haven't incorporated that into any of our flows, any of our workflows just yet. Other important buttons, log out on the upper right. That does the obvious thing. Right next to it is change tax year. If you need to go and do someone's back taxes, this is how you can change the tax year that you are in. Just click change tax year, pulls down a menu of the available years. In the practice lab, we can only go 1 year back. In the live software, we can go as far back as TaxSlayer was contracted with VITA.
Can you go back 2 steps, like, sure, when you get to this screen, where did you go?
Yeah. When
I
you
apologize.
hit that screen, let's see if I can. There we go. Nope. There we go. Okay, on this screen, in order to progress further, you just click on Go to Practice Area.
Thank you.
So in order to change tax year, you just hit the Change Tax Year button and it'll drop down the years that you have available. Pick the appropriate year and notice that it changes the dates in a couple different places. So it'll say in the upper left, 2023 tax program. It'll say on the Start New Return, it'll say Start New 2023 tax return. This is the opportunity where you have to realize, oh, I was working on someone's back taxes. I need to change back into the current tax year to help the next taxpayer. Make sure you are in the correct tax year because you can't transfer return information from 1 year to the next until that return is done and you can import it into the next year. So if you're starting a 2023 return, but you accidentally start it in the 2024 software, you gotta start from scratch. Make sure you're in the correct tax year. All right, the important buttons. There's starting a new return, and then there's the client search. So actually, I should, before I forget, head back to 2024 myself. And I'm gonna show you first the client search button. On yours, it's not gonna have anything because you haven't prepared any returns yet. On mine, I have the three of the sample returns that I've prepared so far. Oh, that's right, because the fourth one is back taxes. So this is how you can see all the returns that you are permitted to see. So during the tax season, you will be permitted to see the returns to which you are assigned. My site coordinators, our site coordinators will be able to see all the returns at a site, and they get the option to reassign returns to different tax preparers, to different volunteers, based on who is preparing that taxpayer's return. So if a taxpayer starts with someone else and then can't finish their return and they return back another day and get sat down with someone different, then the site coordinator will go in and flip their return over to your account and you will suddenly be able to see it. This is to compartmentalize things and make it harder for a taxpayer sitting down with you to see many other people's information, and also to reduce the liability of any one volunteer accidentally doing something. You have a lot of filter options. You can filter by the status, you can filter by return tags, you can filter by date, you can say, hey, don't show some of these things. Or you can even just type in names. So let's say I want to look at the return for the bulls. All right, so we just type in their name and their return is the one that pops up. One thing I want to make special note of, down here, when you're actually looking at the available returns, you have a lot of information here. You have a lot of personally identifying information here. you have first and last names, you have phone numbers, you have partial SSNs. Site coordinators see the whole SSN. This is important for the volunteer standard of conduct and the quality site requirement specifically that says keep confidential information confidential. Do not leave this screen up any longer than it has to be, because every second that this is up is time for a passing taxpayer to potentially see other taxpayers' personally identifying information. It's kind of unavoidable. We do have to pass through this screen every now and then, but don't leave this up any longer than it has to be. And definitely don't leave your computer while this screen is up. In order to leave this screen, you can always just hit back. And that'll take you right back to the main menu where there's no PII, there's no heartburn over leaving the screen up. All right, let's see. I'll just show you how the Start New Return works. You can click on Start New Return, and then it'll pop up a dialog, and it'll show you place to enter the Social Security numbers. To prevent you from starting a real return in practice software, the middle two numbers are always 0. So that should be kind of an indicator of, oh, I'm in the wrong system. You have to enter the person's Social Security number. Every time you get away from a field, it will fuzz out. Why are they doing that? Well, it's so that when you're entering the Social Security number the second time, you're looking back down at the Social Security card in your hand as opposed to looking at the number you just entered. This is part of the verification that you aren't fat-fingering something. This is making sure that you are looking at the original document itself and that it'll match. So it's just, yeah. So if they don't match, it'll throw an error and say, hold on, you got one of these wrong. Double check your work. Another QSR 10, Quality Site Requirement 10, data privacy thing to worry about, data security. I know I have the bad habit, and I know other people have the bad habit of reading out numbers as you're entering them, as you're typing them. Please don't do that with people's Social Security numbers. I have to consciously remind myself not to read out Social Security numbers out loud when I enter them. All right, so you enter the Social Security numbers, and then you have this option down here of available taxpayer profiles. And it's basically, hey, like, do you want us to auto-populate certain forms that are very common for taxpayers in these circumstances? Nah, just leave it on basic no profile. That'll start you with just a clean slate and no extra forms that you don't need. So I'm gonna go ahead and exit out of that. I'd suggest you go ahead and exit out of that as well and just leave yourself on the main screen. Because now, I would like you to reference the print to packet and go to page 5. Because this is the first of our sample problems, our sample scenarios that we have prepared locally for your benefit. No, that should be it.
Yeah, it's on this package.
Okay. Yeah. Page 5, this should be titled Basic Scenario Andy Alderman's Gap Years. So this is our way of doing a couple of things. This is one, a way to familiarize you with just the way that the test is formatted. The test will give you an interview sheet. It will give you it will give you an intake, sorry. The test will give you this like 1 page of summary of what's going on in the situation. And this is also where you find the answers to the interview that you would be conducting with the taxpayer. The test will then give you a completed intake sheet for that taxpayer and all the forms that they give you. What the test will also do, and this is why we create some local scenarios for you, is the test will give you perfect information. The test will give you exactly what you need in order to prepare an accurate return. The test will give you a taxpayer who knows all of the tax stuff already. The test will give you a taxpayer who knows exactly what they're supposed to answer to each question in every circumstance. The test gives you perfect scenarios. The likelihood of you running into a perfect scenario in real life is exactly 1 in 1,662. And that's because I will generally have my taxes done by a VITA site volunteer at some point throughout the year. And you can rely on me to have filled out the information properly. But in all likelihood, taxes are confusing. If someone understood exactly how they work, they wouldn't be coming to us, they'd be doing it themselves. People mess up their documents all the time. People answered questions wrong all the time. People put the wrong things or colloquial things, or people mess up documents, they forget documents, they'll put the wrong document down, they'll mark things wrong all the time. People will make honest mistakes everywhere. It's why our due diligence is all about giving people the chance to correct themselves. Because people make mistakes all the time. We're all human. These practice scenarios will make mistakes. These are realistically created for you to reflect on what a real return, what real documentation will look like. Sometimes it's not even the taxpayer's fault. Companies fill out their tax forms wrong all the time. There will be companies in these practice scenarios that have filled out their forms incorrectly. This is going to teach you how to deal with them. So, our first scenario is a very simple one. It's to teach you the basics of how TaxSlayer works. We have here an intake volunteer introducing you to 21-year-old Andy Alderman. Andy hands over these documents. She hands over a completed intake sheet, her driver's license with a picture that looks like her and a birthday noted there, her social security card, her W-2, a Form 1099 INT, a checkbook, and she answers your questions in a forthcoming manner. You don't get the sense that she's concealing anything. When you ask her about her dependency and filing status, so this is you looking over her documents and performing the interview with her before you start her return. When you ask her about her dependency and filing status, Andy answers thus. Her dad, Arnold, has said that he won't claim her this year. Andy wasn't married on December 31st and has never been married. She plans to start courses at NCTC in 2025, but she wasn't in school at any point in 2024. She lived with her dad until sometime mid-July when she moved out into her own apartment. And her dad paid the lion's share of her living expenses in 2024. When you ask about her income, Andy says that she started working at a bookstore in August, and that's where the W-2 is coming from. When you ask about her interest income, because she's marked these things on her intake sheet, she says that she got one 1099 INT and hands it over to you. Fairly simple. It's a DATCU 1099 interest form modeled explicitly after the one that I used to get. Expenses. She does put some money towards a retirement account, mostly because her dad said to do it. And also her dad says that she should be able to claim the retirement savings contributions credit because of doing that. Now, she did mark on her intake sheet. Notice she didn't give you something, but she did mark on her intake sheet that she has gotten a letter from the IRS. And so when you see that checkbox, you can say, in fact, I can show you online, I should also show y'all. She marked that she received a letter or a bill from the IRS. And when you see that, and you don't see the letter in front of you, you ask, hold on, you marked that you got a letter. Can I see the letter? Do you have that available? Can I see that? And she goes, oh, yeah, sorry, forgot about that. Digs in her backpack and pulls it out, gives it to you. She produces a CP01A notice from the IRS. This is an identity protection PIN letter. And this is exactly what they will look like. And this is the key number right here, 024601. Big old letter, 2 pages, lots of text on it. That's the only one we care about. And making sure that it's actually given to her as well, but you know, details. This number needs to be added in on the tax return or else it will reject. At some point, the IRS detected that Andy was the victim of identity theft, of tax-related identity theft. As a result, every year they send her a new CP01A notice with a new number on it. And that number must be added to her tax return so that the IRS knows that it is her filing that return. People forget that they have an IP PIN all the time. And then the return rejects. And then we have to call them back and say, hey, listen, you were supposed to give us an IP PIN number. The IRS sent you a letter. Can you bring that letter in so we can add that number? Because right now your return got rejected. They didn't accept it. So we've got to have the IP PIN number, even if they didn't mark that they have an IP PIN, even if they don't mark that they got a letter from the IRS, ask them anyways. Always ask if there's an identity protection PIN number. The way I phrase it is, hey, last year, did you get a letter from the IRS with a 6-digit number on it that we got to add to your return? And hopefully they will remember. You will encounter people who will forget and then it'll reject. That's not a reflection on you. They forgot the number, they didn't bring it in, they didn't give it to us. That's not our fault.
So question, this says January 2nd, 2025. Does it typically come prior to 1099s and W-2s? And okay, so it should come earlier in the year, so you can use that as a kind of a hint, earlier inject. Okay.
Yep.
And then how common would you say it is though for them to have a pen like that?
It is getting more and more common as the data mining gets worse and worse, and spam gets worse and worse, and identity theft gets worse and worse. Used to be we'd see maybe like 1 in 100. Now I'd say probably 1 in 10.
Okay, wow.
Returns have an IP PIN. Yeah. I'm probably exaggerating a little bit, but not by much. It feels like 1 in 5 whenever we get rejects. But that is explicitly modeled after a real CP01A.
And if they had like a picture of it, would that be fine too? It doesn't have to be the physical letter itself, right? Or okay.
I would want to see the original. Sure, that all we're looking for is the number at the end, but identity protection PIN, I kind of want to see the original. And then healthcare coverage. But Teddy, you're saying The 2017 TICJA bill got rid of Obamacare. No, it didn't. It just got,
The mandatory.
it didn't even get rid of the mandate. It just zeroed out the penalty. They were not able to, the way they passed it, they were not able to actually get rid of the mandate. They just zeroed it out. Thankfully, the IRS did not make us have to figure the penalty for a $0 penalty. They just said, okay, that stuff doesn't do anything anymore, ditch all that. What has stuck around is the marketplace to Obamacare, where healthcare.gov subsidizes your healthcare by paying your insurer by paying your insurance company a certain amount of money, and then you pick up the remainder. That then gets what am I trying to say? Not consolidated.
Annualized.
Basically, it gets trued up during taxes. When you get Obamacare, or when you get an Affordable Care Act plan, we get a marketplace plan, a healthcare.gov plan, what you'd have to do is you have to guesstimate, prognosticate, take a wild random guess at how much money you are going to earn in the next year. And then based off that estimate, the healthcare.gov pays the insurance company a certain amount of money to subsidize your healthcare. And then at the end of that year, healthcare.gov has paid a certain amount of money based on your estimate. Now you provide your actual income over the year. And then that tells healthcare.gov, or that tells the IRS, well, the federal government should have paid $5,000 to your insurance company for your health insurance, but you didn't earn as much money as we thought. Sorry, got that backwards. The IRS says, well, over the past year, healthcare.gov paid $5,000 to your insurance company already to subsidize your premiums based on an estimate of $20,000 of income. But you didn't make as much money as you thought you would. You only made $18,000. So actually at $18,000, healthcare.gov should have paid $6,000 last year instead. Our bad, we didn't pay them enough. You were supposed to have $1,000 discount, more discount on your health insurance plan. So you know what, here's the $1,000 that we owe you. Or the other way around, whoa, you earned more money than you thought you would. So actually, based on your income of $22,000, healthcare.gov should only have paid $4,000. So you owe us $1,000 that we weren't supposed to pay them. Pay up. That reconciliation of the Affordable Care Act is done via your taxes. And that is why we still have to ask about healthcare. And we still have to ask specifically, did you have healthcare via the marketplace, via healthcare.gov, via the Affordable Care Act, via Obamacare, via however else people call that stuff? There's half a dozen different names out there for it that are all in common usage. And some people recognize one, but not the other 5. So whenever I'm asking, I use that series of names. And yes, some people do bristle when I say Obamacare. It's like, well, I'm sorry, that's a common name for it. I'm not making a political statement of any kind. When I'm wearing this badge, I am politically neutral. I'm just here to help you get your taxes done. And I'm just trying to make sure that you don't have a 1095A that we need to reconcile. So that's why we have this healthcare question. In this case though, we ask, hey, did you have health insurance last year? And she says, yeah, I'm on my dad's insurance still. Okay. Is your dad's insurance? Oh, it's from his workplace. Okay. That we know is not going to be healthcare.gov, know that's not gonna be 1095A, so we don't have anything to reconcile. All right, so think through our order of operations here, right? Dependency is first. Can Andy claim any dependents? Can Andy be claimed as a dependent?
Quick question, the 1095A is within the scope, within our scope, correct?
Correct. 1095As are within our scope of service.
Okay.
There are certain circumstances where we are not allowed to touch a particular type of 1095A, and that is, in fact, if Andy was on her dad's insurance and her dad got insurance from the marketplace, his return would be out of scope for us.
Because there's a 10.
No, I'm sorry, her return would be out of scope for us. Yeah, it's reconciling a 1095A without the other person on this return is out of scope for us. Yeah, it's a good question. The 1095A gets to be a real mess. We lost a good 5 volunteers over the enactment of the Affordable Care Act because it was such a bear. All right, so if we're thinking about dependency, we probably need to visit the Holy Chart. So let's go ahead and look at the dependency information and check into, can Andy be claimed by her father? First off, her dad cannot be claimed by anyone else, so I'll just put that out there so we can ignore this. Is Andy a qualifying child or qualifying relative for her father to claim for dependency purposes? Someone walk me through this chart.
She's not a student.
She's not a student. Okay. So the first question obviously is Andy her father's daughter? Yes. Child. Second question, what's her age? Does she pass the age test? A, under age 19, no. B, under age 24 at the end of the year, yes. And a full-time student, no. Is she any age and totally permanently disabled? No. Therefore, yeah, you're absolutely right. We failed the age test for qualifying child. All right. So that means that she can't be claimed as a dependent, right?
As a qualifying child.
As a qualifying child. All right, what's the next step? We just failed the test there. Qualifying relative. Test 1. Can Andy be anyone's qualifying child? No. Same answer as with me. She's gonna fail the age test for everyone. So we pass test number 1, qualifying relative. Test number 2, is Andy related to her father in one of the ways listed under relatives who don't have to live with you? Yes, child is one of those ways. Test number 3, is Andy's gross income for the year less than $5,050? How do you know? You look right through and you figure out her W-2 lists about just shy of $4,000, and then she has a 1099 INT for $30. And that's it. So we pass the gross income test for qualifying relatives. She earns less than $5,050. Did Arnold provide more than half of Andy's support for the year? Most likely. We've been given a colloquial explanation for it. She says he paid for the lion's share of her living expenses, but we can pretty well conclude, yeah, he did. Okay. So she can be claimed as a qualifying relative for dependency purposes.
So, Andy failed the age test because she was not a full-time student, correct? And it was mentioned that she's going to take classes in NCTC next year. So does that mean that she gets to be a qualifying child next year?
Quite possibly.
And is it only like if you're a full-time child and if you're a full-time student and you're working a part-time job, you can still be a qualifying child?
Yes.
Okay. Okay. Thanks.
All depends on, at that point, it all depends on, do you still live with your parents? And how much money do you earn? Are you able to support yourself? And then at some point, it's the possibility of, oh, you might have gotten married. Are you filing a joint return with someone else? But yes, all these tests, you are interpreting tests exactly correctly. So what's Andy's filing status? If we're working our way down the order of operations. Single filing status, all right. Show me.
Were you married at the last day of the year? No.
Yeah.
Spouse, no. Spouse.
She's never been married, so we just skip over those two boxes.
Yeah.
Did
So I
she?
didn't know that the third says she's single.
Yep.
She didn't pay more than half.
She did not pay more than half the cost of keeping up her own home, which just automatically, okay. No, therefore single. Pretty simple questions here. So knowing that, and knowing that everything else is pretty cut and dry clear, now we can start a return. And hopefully that lasted long enough that you all actually timed out of the tax slayer. If not, that's okay. Still there? Excellent. Go ahead and start a new return. So you have her social security card there, or you have a summary of her social security card on the interview sheet itself. We've given you the first three numbers, the middle two are zeros, and the last four are X's. This is where we're going to get you used to how the test works. Whenever you see the four X's, you can just put in whatever 4 digits you want. So 1, 2, 3, 4 will tend to bring up some interesting pre-entered selections because lots of people use 1, 2, 3, 4.
You want us to use XXXX?
No, you put whatever 4 numbers you want. You just have to remember what they are because you got to put them on the second one as well. Enter the social security number, enter it a second time, leave it on basic no profile, scroll to the bottom and click start return.
Now it expired.
Ah, good. Whenever you time out of the practice lab, do you see one password or do you see a username and password? The answer is, I'm going to let mine expire if I can.
So it goes with
It goes to the live one. So part of the reason I stall so much on that interview is to make sure that you see when you get timed out of the practice lab, the login screen it takes you to is for the live software. In order to access the practice lab again, you need to jump back to vita.taxslayerpro.com and go to the practice lab button. No, it's not timing out. practice lab button. Thankfully, it doesn't do the other way in live software. In live software, if you time out, then you'll just end up back in the live software login. All right, but once you create the new tax return, the very first screen that you are going to see is a screen that says, hey, we're still working on this. This is active construction zone. Not all the formulas are active yet. Or not all the formulas are updated yet. Everything that you need to have updated for the test purposes should be ready to go. But there are some things, like the federal summary screen, which may not yet be updated, because right now I'm still seeing a 1040 for 2023. But first screen you see should be a, hey, just keep in mind that this is still a work in progress. Second screen you should see is where a tax layer gets it wrong and asks you about filing status first. But it asks about filing status first, and this is why we determine dependency and filing status before we start the return. We know what the filing status should be. Pick single, click continue. Do not use the filing status wizard. The filing status wizard is a fraud and a charlatan. The filing status wizard lies. I used the filing status wizard that 1 year that I thought I had it all memorized. And the filing status wizard told me that, no, they're a qualified widower. The filing status wizard was wrong. Look through the 4012, make sure that you understand what it should be. Select single, click continue, and then it's going to be personal information. And at the risk of having given you spoilers already, first scenario, I will tell you. In the first name, Andy was introduced as Andy. She has written down her name on her intake sheet as Andy. She has said Andy the entire way through. Everyone talking to her has been Andy. Her name on her social security card is Andrea. And we have to put the name as it appears on the social security card. The reason is the IRS is going to look at the database that it gets from the Social Security Administration of people's numbers and their names as the Social Security Administration understands it. So whatever the Social Security Administration has, that is the name we need to put here. She is not Andy to the SSA, she is Andrea. Andrea Alderman. Her social will already be filled in. Her date of birth, you can pick up off of either her intake sheet, or I prefer to be looking at her photo ID for this. People can accidentally transpose dates on the intake sheet. It is much harder for them to end up with a driver's license with the wrong birthday. For her occupation, you can put whatever they want you to put. The Bureau of Labor Statistics would really love it if we got the occupation just perfect for her. The Bureau of Labor Statistics can give me grant money, and then I will care what we put for occupation. Then there's this little checkbox. Go ahead and check that this taxpayer can be claimed as a dependent on someone else's return, because she can. Is she going to be? Well, this is where a second question pops up. Taxpayer is claimed as a dependent on someone else's return. And in this case, we can say no. Arnold's not planning to. He really should, but he's not planning to claim her as a dependent. Fun fact, this second question does nothing. Whether someone is or is not claimed as a dependent on someone else's return does not matter to the IRS. All the IRS cares about is, can you be claimed as a dependent? So then why are they asking this question? Why does TaxSlayer have this question? The answer is, this question is here because of human tendencies. Because we are panicky, flighty creatures. And when we see the tax volunteer, Mark, when Andy sees you, Mark, she can be claimed as a dependent on someone else's return, she's gonna panic and she's gonna say, wait, why are you doing that? No, don't do that. He's not claiming me. And this is where TaxSlayer helps us, and we can say, no, don't worry. I have to, this is technical. I have to get this technically right. Technically, you can be claimed, but don't worry, we're gonna mark, no, you aren't being claimed. It's a placebo. It doesn't do anything except it gets Andy calmed down and not worried. Then there's a bunch of other check boxes here, which all set conditions for most of them, set conditions for the rest of the return. So for instance, is she over age 18 and full-time student? Well, she's over age 18, but she's not a full-time student, so don't check that box. If she's blind, you can check this box. If she's dead, you can check this box. You usually get the chance to turn this into a joke. I usually turn this into a joke. Hey, so you're not blind, you're following along pretty well, you don't seem to be totally and permanently disabled. You don't seem to be dead, but you're not dead, are you? You're not undead, not a zombie, not a vampire? No? Okay, cool. But on the flip side, when you die, whoever's managing your estate does have to file your last tax return, and you would mark taxpayer is deceased.
I see something.
Yeah.
I see something wrong here on the,
Oh.
where she issues an IP pin, she has checked off no.
That she did.
Was that?
It's intentional.
Okay.
People
I'm sorry.
forget all the time.
Okay.
No, don't apologize. That's good. Catching the little discrepancies like that is good. Because, like I said, these are realistic scenarios. So, in theory, you should see a yes mark there. Because she got an IP pin. She should have marked yes. She didn't.
What are you guys talking about?
Sorry. It was noticed in the room that Andy on her intake sheet did not mark yes to have an IP pin. Even though she does have one. She should have marked yes. But in real life, you're gonna run into people who've marked no on that, even though they have a CP01A letter in their hands.
So they moved these 3 questions to the front sheet instead of the third sheet. That's good.
Yes.
That's good.
I like most of the changes that they
Okay,
did to the
good.
intake sheet. Most of them. I don't like how much more they're making us have to write. But, yeah. All right, so blind, deceased, taxpayer wishes to contribute $3 to the presidential election campaign fund. You will have people ask you, wait, why would I want to give $3 to the president? That is not actually what this box does. And also you'll have some people say, why do I want to sacrifice $3 from my tax return to go to the president? That's also not what this box does. What this box does is measure a taxpayer's idealism, in my opinion. So what this is, the Presidential Election Campaign Fund, it is not a slush fund for the current sitting president. It is a fund that the federal government sets aside, and it's layman's summary, if a presidential candidate all presidential candidates get equal access to that fund let me go back. Start from the beginning. If you check this box, it does not affect your return at all. There's no $3 increase, there's no $3 decrease, nothing happens to your return. Checking that box tells the IRS to set aside $3 from some budget somewhere to go into the Presidential Election Campaign Fund. What is the Presidential Election Campaign Fund? It is a fund to fund presidential election campaigns for people. It gets split evenly between all the candidates who sign a pledge to refuse corporate donations. No one ever refuses corporate donations, so no one ever uses the Presidential Election Campaign Fund. Therefore, the box does nothing. It is a measure of idealism. Idealists check the box, others don't.
Would it be accurate to say, do you want to increase the already $36 trillion deficit by $3?
Nah.
Okay.
I appreciate the joke. Yeah. So this is the second place where presidential or election stuff or political stuff has come up. Just a little ethical note. While we are at a VITA site, while we are volunteering with United Way of Denton County, we are here to help people file their taxes for free. Doesn't matter their political lean, doesn't matter who they voted for, doesn't matter any of that. We're not here to give political opinions. You're not here to take political opinions. If someone hears me say the magic word Obamacare and starts on a rant about Obamacare and about Obama and whatnot, then you know what? They are free to rant. They have the right to free speech. They will be escorted outside to exercise their free speech elsewhere by a site coordinator, because we're not here to get into the politics. We're just here to help people with the universal problem of filing people's tax returns. Other things here, whether they serve in a combat zone, if you have to check this box for a taxpayer, then you need to be military certified. Whereas someone affected by a natural disaster during the current tax year, this could actually happen this year for us, because we did have the tornadoes in May. So it is theoretically possible we could see people affected by a natural disaster. That checkbox allows you to do certain things. Being affected by a natural disaster opens up certain tax strategies that are available to people who've been affected by a natural disaster. For instance, there's an exception to you're allowed to withdraw a whole bunch of money from your retirement account because you got affected by a natural disaster without a penalty. Taxpayer receives, sold, or disposed of a digital asset. Be very careful with this one. If someone bought Dogecoin or Ethereum or Bitcoin or whatever other meme currency or meme electronic currency they want, if they bought it, that's fine. If they sold it, that's out of scope for us. The IRS, or really Congress, has not yet decided how they want the federal government to treat electronic currency, virtual currency. Sometimes it gets treated as cash, and sometimes it gets treated as an asset, like a commodity, like gold or a stock. And it's inconsistent as to which. The IRS does not want us touching that until Congress has clarified how that should be treated, which, probably occur in 2070 or so.
So even if they sold like $5 worth of Dogecoin, they're out of scope. We can't help.
Correct. Okay. Because that would be income that Congress has not directed the IRS how to treat it yet.
Okay.
Question out of curiosity, they rearranged the intake form.
Yeah.
From 2 years ago, last time I did this. I don't see did she affected by a natural disaster? Am I missing? Is it not her form?
I don't remember seeing it.
But it is still a question.
It is absolutely still a question, yes. No, it's not on there, is it? Nope, there it is, there it is.
Cleverly hidden.
Have a loss related to a declared federal disaster area. That's on page 3.
Thank you, sir.
Towards the bottom.
Thank you.
All right, continuing on down this, there's a place where we can say whether the taxpayer should receive communications in a language other than English or in an accessible format. We're trying to increase the accessibility of tax preparation to people. Then there's a place to enter address. This is incredibly important. The address that you enter here is the address to which the IRS will send mail correspondence for the next year or until they get a new address. This address is also, for people who elect to receive a paper check, this address is where the paper check will be sent. Whenever someone ends up getting a paper check instead, I will explicitly I'll pull up their intake sheet and show them their address and say, just making sure, mail going to this address will be opened by you, correct? Just to give them the chance to correct that if they didn't get the right one. So go ahead and enter her address, 1007 Wildy Street. No apartment, zip code 76210. And when you finish clicking on 76210, what does it do?
Auto-populates the.
It auto-populates. Did it auto-populate the right city? No, it did not. 76201 is a shared zip code. Part of that zip code is in Denton, part of that zip code is in Corinth. TaxSlayer does not realize that. TaxSlayer will pick one of the, will have associated every zip code with one city. It auto-populates most of the time that you enter a zip code. In this case, it has auto-populated the wrong city. Always double check. Whenever TaxSlayer does something automatically for you, double check that it did the right thing. It won't always do that. So, correct it to Corinth, you can just highlight Denton, type over it, it'll be just fine. The state's good though, and she was a resident of Texas as of the future. And then daytime phone number. Make sure you type in a good phone number for her. Specifically for the daytime phone number, because that's the one that shows up on the client list. Therefore, whenever someone's return gets rejected, that's the number that our site coordinators are going to call to say, hey, your return got rejected. This is what we're going to do to fix it, and this is what we need you to do so that we can fix it.
Teddy.
Yes.
Like, should we be verifying her address from one of the documents she brought?
I tend to just point at the address when I enter it, and I'll let them watch as I'm entering it, and I'll say, okay, so we're 1007. Okay, is this address right? Did I get that right? I'll ask that.
ST Street, doesn't matter.
No, not so much. As long as the USPS will recognize it. There's a place for a secondary telephone number. If there's a second phone number they want to add, doesn't really mean much. When the first phone number doesn't work, we will try the second number, if there is a second number. Email, we do not use people's emails except for one purpose, and that is at the beginning of each tax season, we'll send an email blast to everyone whose emails we have saying, hey, last year you used our service. This year we're going to be at these sites at these times during these days. We'd love to see you again. That's the only thing that we use this email for. There is the opportunity if the if the taxpayer wants to use the customer portal, you can send them an invite. I have no idea how the customer portal actually works, but the option is there. If you click continue, then it should then ask you, I don't know whether it'll ask you whether to add any dependents or not. Ideally it wouldn't, since we marked that she can be claimed. But if it does, then you can just simply say, oh, no, no dependents, please.
Now, what happened for me might be Apple specific, it might also be tax layer specific, it says you want to see the address, I'm assuming for future
Oh,
use.
Yeah, it has to-
that was moved. Okay,
That's it. Do not do not do that.
save it, okay.
Do not do that. Our computers should be set up so that they will not save any taxpayer personally identifying information between
I play
sessions.
solitaire on this, I don't use this for anything else.
Yeah.
So, I mean, I'm very Apple familiar. So.
Yeah. Do not save information. If you notice that that your computer is doing that, bring that up to the site coordinator so that we can fix that. All right. It'll either have dumped you onto the dependent screen or it'll have dumped you into the income screen.
And then qualifying.
Okay. Then here you can say, do you have any dependents or qualifying people to add? Say no, because we've already determined she can be claimed as a dependent, therefore she can't herself claim a dependent.
It goes right to the income statement.
It goes right to income, yep. So before you go to income, I would say this is also the opportunity, actually, I'm gonna go ahead and jump into the income section to demonstrate. So you're in this area, or it's something similar to this. To navigate through TaxSlayer, you have a menu on the left, which has high-level items like the federal section, and then lower-level items, income deductions, other taxes, payments, etc., and then individual forms that have been created once you've created them. Right now, you don't have any. In order to navigate between them, like, for instance, go back to where we need to enter the IP PIN, you can click on the master section, it'll take you back, and then you can click on IRS Identity Protection PIN. And that will show you the interface where we need to enter that 6-digit number off of Andy's CP01 notice. So we enter 024601. And then we click continue. And that's that.
I hit continue and that's what I got.
Oh,
Okay.
interesting. Yeah, that's how it should look. Although yours looks a little different, probably because of the mobile responsive size.
Different mask, yeah.
Yep. So you can click continue off of that. If you have multiple people on the return, it will give you an identity protection PIN option for each person on the return. Make sure you enter their IP PIN in the correct one. Otherwise, the IRS gets a little ornery. All right, now we can go back to federal section and income. And we can start entering forms. So go ahead and click on W-2 wage statement. And then we can flip over into her W-2. And this is a nice, simple W-2, nothing too crazy going on here. It's W-2 from Heron Bookstores. Has her name on it, her address, bunch of numbers. And in TaxSlayer, we end up with a place where we end up with one of two ways that forms can appear in TaxSlayer. On many forms, we will get the opportunity to recreate the form as exactly as possible. And when you get the chance to do that, like on a W-2, recreate the form exactly as exactly as you possibly can. Mistakes and all. Now, Heron Bookstores has not filled out their W-2 incorrectly. It is filled out properly. So we can just enter what it says here. So it's a standard W-2. We can leave that box checked. We can enter the employer identification number, in this case 755647815. And when you enter that number, it should automatically pull up an employer. What do we do whenever TaxSlayer does something automatic for us? Double check that it's done the right thing. So we have Heron Bookstores Ltd. at 1168 Retail Lane, 76201, Denton, Texas. Cool, that all matches. Employee information, employee's full name, cool, Andrea. Her address, but then TaxSlayer has again put the wrong city. State. And now we suddenly get box numbers. Recreate the W-2 as closely as possible. What we are doing right now is we are creating a copy of the W-2 on this electronic file so that when we send it to the IRS, they get a copy of the W-2. What the IRS does is when the employer files their W-2, they send a copy to the employee, and then they send a copy to the IRS. So the IRS has a copy of Heron Bookstore's W-2 already on file. And now they're looking for a copy from Andrea, from Andy, that will match the W-2 that they already have on file. So we have to match the W-2 as exactly as possible, even if the employer completely messed it up. We need to make sure that the W-2 Andy submits will be the same as the W-2 that the IRS has already gotten from the employer. Now, if a W-2 is royally messed up, what we really need to do, what the IRS would really like us to do, is to tell Andy, can you ask your employer to correct that and issue you a new one? But it is a very common circumstance that the employer will refuse to do that. And therefore, we just have to put what Andy has got. Employers mess up W-2s all the time. So, to duplicate things, box 1, 3864.37, or 3864 if you just want to round things automatically. You may notice that, I'm supposed to have duplicated this exactly, but I haven't entered the decimals. I did enter the decimals. TaxSlayer will automatically round things to the nearest dollar because the IRS will automatically round things to the nearest dollar. The IRS does not care about pennies. All they care about is the nearest dollar. So you can decide for yourself whether you want to just go ahead and round things as you enter them, or whether you want to enter the full decimal places and then let the system round things automatically. Either school of thought is perfectly fine. I'm personally of the precision school of thought, so I'll enter the decimals anyways and let the system do things automatically. But either way, you end up with the numbers that I have on screen right now. And it'll automatically enter, once you type in the amount in box 1, it automatically enters box 3, 4, 5, and 6. And in this case, it should all match up after rounding. Box 2, you do have to manually input, and you do need to put that $40 in there. Then in box 12, specifically 12A, we see a code delta. So you can go to box 12A in the system, select delta, and type in 193. There's nothing else in box 12B through D, so you can just go to 13 and click retirement plan. And that's that. That's a W-2.
Love Texas. No state income tax.
No state income tax, thank God. Then you can hit continue. Or you also have the option of save and add another W-2. If you need to add multiple forms, you can do that there, or you can do that via this interface. So welcome now to a interface for places where you can enter multiple instances of the same thing. There are multiple menus in TaxSlayer which will resemble this one. So here you have the opportunity to add another W-2. If you need to edit a W-2 you already have, you can click that little pencil icon. That'll allow you to edit it. If you need to delete an item that you already have, then you can just click on that trash can and it'll do the obvious thing. Now you can click continue, and it dumps you back into the income section. We have one more form to enter for her, which is the 1099 INT. And this is where I'm going to show you that on the one hand, you could just look at the menu and you see, oh, right here, form 1099 INT. What if you're not on the income menu though?
Form finder.
Yep.
Love it.
Form finder in the upper left is a place where you can enter the form number that you have, or you can enter the form subject that you have, and it will show you all the things that it thinks you might be interested in. So I can type in, for instance, interest. And right there, the first item is form 1099 INT, interest income. Or I can type in 1099 and then INT, and typing in the form number shows us 1099 INT. And if you click on that link that shows up, it'll take you to that specific thing. And this is another situation where you get the opportunity to enter as exact a replica of the form as you can. So payer's name, DATCU. TIN, or taxpayer identification number, or employer identification number, 750813379. That is actually DATCU's real EIN. Their mailing address, their zip code, their city, their state, and then there's a section for you to enter interest income, box 1, $30. And then you can look through the rest of this interest section if you want. Nothing else applies. There's like 30 more fields, and the only ones we cared about we have already touched. So at the end of that, just click continue. And voila, you have entered her interest income, all $30 of it. And thus endeth all the forms that we have to enter, but we are not done yet with this tax return. We have some very important things left to do. Specifically, we have a very important question to ask. Did you have health insurance via the marketplace? Affordable Care Act insurance plans. This is where we have to reconcile if someone had an Affordable Care Act insurance plan. Thankfully, she did not. So we can just say, nope, continue. And that's that. Now we get dumped into, well, okay, it's gonna tell us, oh, state returns aren't ready yet. That's okay, we don't need state returns. Now we will be dumped into the summary and print section. So this is also where you would go through, and I should make a note.
This is nice.
Yeah.
The reasons they give it to you.
Yeah. I should also note, my personal practice to go through this, and you'll see it whenever I quality review something, but I will ask about almost every option that is on the TaxSlayer menu. So I will ask Andy, all right, so we've entered your Form W-2. Do you have any other Form W-2s that we need to add? This is part of our due diligence requirement. She'll answer no. Okay. Did you live outside the state of Texas anytime in the past 2 years? No? Okay, then we won't have state or local income tax refunds to worry about. We've entered your 1099 INT. Do we have any other interest or dividend income for us to record? No? Excellent. Did you pull out any money from a retirement account last year? No? Cool. Did you live in an area? No, you didn't live in an area affected by a disaster. Did you have anything that'll appear on a 1099-G Box 1? No? Okay. The reason I'm asking it that way is because I don't want to announce to the entire room, hey, were you unemployed last year? It's preserving the dignity of the taxpayer where we can. All right, miscellaneous income. Do you rent out property to other people, or the Schedule E? Do you rent out property to other people? No. Did you do any odd jobs or like contract work for other people? No? Okay, so no non-employee compensation. Do you have a small business making candles in your garage? No? Okay, no Schedule C to worry about. Do you get royalties from a gas well that your grandpappy owned and from way back when? Or do you get royalties from a book that you wrote when you were a kid that you're still collecting some residuals on? Did you trade big on the stock market? No? Do you flip houses for a living and thus get a whole bunch of capital gains? No? Okay. Do you own a farm? Do you have a couple of head of cattle up in Gainesville or a plantation in Puerto Rico we need to account for? No? Okay. No, you've never been married, so there's no alimony to worry about. Any other income? Gambling winnings, lottery winnings, either the good income, that's how they got Capone. No? All right.
So if any of these proposed tuition reimbursements came, it would be cancellation of debt, right? And actually,
Potentially,
okay.
yeah.
Okay.
Yep.
So maybe some of those out there, or did they
There-
all not pass?
There may be, they were proposed, I don't think anything's actually passed.
Okay. Sorry.
But the federal forgiveness, I don't know enough about how that works. I don't actually have any student loans
By the
myself.
third week of tax prep season.
Yep, we will. I'll also point out in the menus, deductions, for some odd reason, this is another place where I disagree with how TaxSlayers organize things. For some reason, adjustments, deductions, and credits are all under the deductions menu in TaxSlayer, which doesn't make any sense, but if you need to find them, this is where to find them. And fun fact, based on our interview, Andy was asking like, hey, can I get the retirement savings contributions credit? Well, you can't if you're being claimed as a dependent, or you can't if you can be claimed as a dependent. So, sorry. Also, it's a non-refundable credit. She has $0 worth of tax liability, so it does not help her at all. There's the other taxes section. That's where you find stuff. Sorry, go ahead.
So why can't she claim like retirement investment? I didn't get that in her deduction, because she can be claimed as a dependent.
Yes, there's a couple different reasons why she doesn't actually get that credit. I'm pretty sure that's one that you cannot claim if you can be claimed as a dependent. And then for certain, she doesn't owe any taxes. Like she had zero tax liability at any point. So credit for retirement savings contributions is a completely non-refundable credit. So it would not help her at all, even if she could get it.
So in this instance, would it behoove her to designate that as a Roth contribution as opposed to a traditional, because there's no liability either way? Well, I know we're not advisors.
Yeah,
But yeah, okay.
to an extent, we can absolutely help to the best of our knowledge, if people have small questions. Ways to optimize their tax situation next year.
And she can't claim standard deduction? Is that what you're saying?
No, she absolutely can claim the standard deduction. The standard deduction is the same for, it's just single filing status. I think it's 14,000 right now.
Sounds right.
But she can claim it. What she can't do is claim the personal exemption, which doesn't matter because the 2017 TICJA eliminated not eliminated, it zeroed out the personal exemption. Exemptions are worth $0 right now, even though they technically still exist.
I saw 1099K on there. Did they actually issue all this last year for over $600 worth of? I know it's proposed.
I didn't see any.
Okay, so it's proposed, but okay.
Yeah, I didn't see any.
That's my the water.
We'll get to that. There's another.
Okay.
Yeah, there's a way to handle that just in case that happens this year. All right, so let's finish out this return. At this point, we have prepared everything that we need to prepare on this return. When we go to the summary and print section, this is where we can explain to Andy how her tax return works. Part of what we're doing is we're trying to help people understand how their tax return works for two reasons. Number one, we're required to advise the taxpayer on how their tax return is working and that they are responsible for it. And number two, like in general, we get the opportunity to teach them more about their taxes and help them better arrange their finances for the next year. Let's take it if we get the opportunity. So normally during the tax season, this is where we could go over the 1040 and show them how everything works. During practice and early in the season, do not use this summary screen. Because as you can see, it has not been updated. It's still showing the 2023 1040. Instead, at the top of the summary and print screen, click on View Print Return. It'll generate a PDF, and then you'll get a button to press that says Print Your 2024 Tax Return. When you click that button, it will open up a pop-up window that has, once you scroll through a couple pages, the actual 2024 forms. So this is a printed version of the e-file that we will be submitting to the IRS. It has her name on it, all this information, filing status. It has her earned income here. It has her unearned income here, that's $30, which total up to her total income, $38.94. She has no adjustments to remove, so it's still $38.94 as her adjusted gross income. Her standard deduction is being limited by her AGI. And thus it is still enough to wipe out her entire taxable income. So she has zero taxable income. Therefore, she owes $0 in tax. Therefore, she gets zero non-refundable credits. Line 17. And 19. But she has zero additional taxes. Therefore, her total tax is still zero. Then she paid $40 via federal withholding over the course of the year. And that $40 is all we're gonna get back for her.
But because we went to the PDF form, we don't have the ability to put in her routing number, her bank account number.
Not yet,
Okay,
not yet.
okay.
We're looking at this because before we enter the e-file information, we wanna make sure that they're actually, that they understand the form we've created and that they are satisfied with the form that we've created. People get a little jumpy if we ask them to start entering payment or refund information before we've explained how everything's working.
Like it.
But this is exactly how you can go through and explain to the taxpayer how their tax return is working. Walk down that order of operations and just show them on the page how all that's happening. This will also have all the schedules that are related to whatever we are trying to do. Like here is the 8880. It's trying to calculate it. And she could have gotten 97 bucks, except that she has zero tax liability. So that zeroed it out. But we can explain all these things to her, and then at that point, she seems satisfied, she's happy with how that turned out. So we can go into the finishing steps, which begins with this e-file section. So go ahead and click e-file. And this will look slightly different in live software. The practice lab is, yeah, continue that. That's a warning that's only gonna show up on mine because of the way that I did last year's. But you'll start with this, a return details screen. And here, the important thing is coming down here to the federal return where it asks, how would the client like to send their tax return? And we want to default to e-file whenever possible. The only times that we don't want to e-file, like this is an explicit requirement of our grant, to file at least 95% of our returns as e-file. The only time that we want to select paper return or paper return with direct deposit is either when the return in question cannot be e-filed for whatever reason, or when the taxpayer has explicitly told us that they want a paper copy to mail in themselves. They will get a paper copy regardless because we give them a copy of the return printed out so that they have it for their own records. But if they select a paper return, then we'll give them 2 copies, one for them to sign and send and one for them to keep as their own records. In this case though, she does want her direct deposit and she's fine with e-file. So we select e-file direct deposit and then we can click continue. The rest of this page doesn't really matter that much. In Practice Lab, it's going to take us through a fee summary where we can say, hey, free is free. We aren't charging you anything for this. The fee is $0. And then there's a section for entering bank account information. Here, we need to enter the bank account that they give us. Ideally, they will have brought a checkbook with them, or they will have one of those direct deposit direction forms, which tells you how to set up a direct deposit. It needs to have their bank's routing number and their bank's account number for the account in question. If they do not have a document, ask if they can look it up on their banking app or online. Like, you can let them get on the computer and log in on their banking website to try to find their information. If all else fails, we do from time to time get people who just hand us a handwritten piece of paper and say, I know this is my account. memorized this number since I was 13. In which case I will ask, okay, are you 115% certain that this is your bank account information? Because if this goes into someone else's account, it could be up to 6 months, if ever, that it takes for you to get your money back. So if you're absolutely certain that this is the right number, then I will put what you tell me to put. In this case, though, she has actually given us a check. So you can pull off the checkbook, the routing number, DATCU, that is actually DATCU's Texas routing number, and then her account number. And this will do that same thing that the Social Security card did of fuzzing out the numbers to force you to look back at the previous document. Make sure you get these numbers right. Put the bank name, make sure you select whether it's a checking or savings account, and then if you see the pull refund button, always click the pull refund button. If you go back into the return and change something and the refund changes, it will not change on this screen until you come back to it and hit pull refund again. So just as a general rule, anytime you see the pull refund button, click it. If someone wants to split their refund between multiple bank accounts, this is where that can be done. Very few people ever do. I can't think of a one actually that I've ever done. But once you have the bank information, click continue. This custom credits thing only shows up during training. And then there will be a section where it's asking some demographics questions. Please make sure that the demographics questions are answered, even if they select prefer not to answer for every single one. And then there may be some custom questions that we assemble just in case there's something we want to find out about our taxpayers. But this is the final screen here, this submission page. And the important thing here is this is where we get to print stuff. We can also print from the client list. But down here, on this page, we scroll to the bottom, and then we click the appropriate tags and the appropriate review or complete marker down here. There will be a tag that says ready for review, and there will be a tag, and there will be an option down here, a checkbox that says ready for review. Peer review. Once you've checked that box, then you can either click save and return to go back to the summary, or you can click save and exit to go back to the main menu. Either way is fine. But that's the point where you would raise your hand and you would say to whoever the site coordinator is nearby, hey, Teddy, can I get a quality review? And then the site coordinator will come over, sit down at your chair on your computer, and go through and quality review.
How long is the review usually, would you say?
It usually takes, if a return took about 20 minutes to do, the review will take about 10.
Okay.
Because we do the longer period of just redoing the entire return all over again. So it takes us a little longer, but it is very accurate. But yeah, generally speaking, the review goes much faster because the reviewer is just double checking stuff as opposed to entering things. And then there will be, once the review is done, there will be a set of instructions in the folder that you get. So you'll get a blue folder when you get to a site, and there will be a set of instructions inside there that tells you exactly what steps you need to take to finish out the return. As in, like, all the way through to they're walking out the door with their return in hand and the return ready to e-file in our system. Any questions about anything that we've covered right now? I know that was a lot. It gets much easier now that you've seen how the entire system works once. So now we can spend energy on, oh, some weirdness just happened. So, are we all okay to power through, or do we want to take like a 5-minute bio break?
I'm fine powering through, whatever y'all want.
I'm fine.
All right. Then I'm gonna hit save and exit, and you guys can do the same. But I want you to flip over to page.
So we don't have a routing number information, right? So we can't get behind the screen.
Oh no, we do. We have on the interview sheet. In the test, it'll actually have a fake checkbook.
Right.
So when you get the chance, go ahead and flip over to page 14 on the print packet 2. This should be for Barbara and Bobby's education expenses. Go ahead and look through the documents you've been given, look through the interview sheet. I'm gonna take a quick bathroom break, but look through all that stuff, start determining things, figure out the filing status, dependency, and we'll talk when I get back.
That's 14.
All right, so what do we notice about this return?
Social Security. I wouldn't accept it or approve it yet.
Yep.
November 24. Despite the fact we went back to school. So he can't be on somebody else's dependency.
Yep. Also, he's hoping to file a joint return for purposes other than just claiming withholding.
$300 educators.
Yep. She's hoping to claim $300 educator's expenses. Or really, she's just saying, look, I'm gonna take the educator thing.
Right.
Just,
You just put the 300 in.
yeah.
So she's been teaching for 10 years.
Pretty close.
Pretty close, right?
Because teachers do get that, or in theory, are supposed to get student loan forgiveness after 10 years of teaching under certain circumstances. And she thinks she's getting pretty close to it.
And as a substitute since 2003, they deserve it.
Yes, very much so. All right, whenever you feel comfortable, go ahead and start a new return. We're going to use Bobby's social security number to start this return. When there's a taxpayer and spouse, you want to try to figure out whose number was used as the primary taxpayer the previous year, because that's the one that will trigger a carry forward of any existing data. Otherwise, it doesn't actually matter whose social gets used. One of the improvements of TaxSlayer over TaxWise. TaxWise was actually pretty sexist. It could only put junior or senior or the third or whatnot on the taxpayer's name. It could not put it on the spouse's name. On TaxSlayer, you can. All right, so filing status. Should be pretty simple. But as always, go back to the chart just in case. Were they married on the last day of the year? Most definitely yes. Did they live apart all of the last 6 months of the year? No. Therefore, they can either be married filing jointly or married filing separately. Those are their only options, and they do seem to like each other and have no pressing reason to file separately, so married filing jointly is their choice. So it's like to married filing jointly, and then hit continue. Then enter their names. And what do you know? Both of their names are not as they have written it on the intake sheet. It's almost like I'm trying to drive home some points here with these practice problems. So Bobby obviously is known legally as Robert. Robert Bowles Jr. His social should already be in because it's the one that you're going to use to start the return. His date of birth, his occupation, he is over age 18 and a full-time student at an eligible educational institution, so we can check that box. He is an idealist according to the intake sheet, so he has checked contributing $3 to the presidential election campaign fund. And then none of the other boxes apply. Meanwhile, Barbara, her last name is going to have been autofilled by TaxSlayer. So you have to correct it because it's not as it was autofilled. So Barbara Bell, because even though legally, like in every aspect, she is known as Barbara Bowles, except for at the Social Security Administration. And we have to match what the SSA has on record.
But like her W-2 has Barbara Bulls.
Yes. And that is one thing that we will actually not be able to correct on the W-2. But it is something out of our control. Like TaxSlayer will not let us correct it on the W-2. Her social, you'll have to manually enter on this screen. Her date of birth, her occupation, and she is also an idealist and wishes to contribute $3 to the presidential election campaign fund. They're a match made in heaven. Then we can put their address, 2204 Jasper Road. 5067 will auto-populate Louisville as it properly should. State, Texas, resident state, Texas. Daytime phone number and secondary phone number. We've been given both, so you can put them both, but if you get two phone numbers, just ask whose phone should we call if something goes wrong with the return. And whichever number they give for that, put that in the daytime phone number.
So because she's secondary on the return, you have two options to double check her social security number.
Correct. Okay. When we're entering just one person's social separate as the spouse or a dependent, then we have to be very careful. That's why we have quality review. And I'll say, I still make mistakes. Everyone gets quality reviewed. Because I can fat finger things, I can get careless on something.
So much better with the 10 key.
Oh, yes, much better. We took pains to make sure that the computers we have, even the laptops we have, all have 10 keys.
Thank you, sir.
This time, when you click continue off of the personal information, you are going to say, hey, yeah, I actually do want to add a dependent. Because spoiler alert, little Ben counts as a dependent. He is a qualifying child, having been born all of 10 days ago. It's funny, is his birthday was originally supposed to be the 30th of November, but I tried to enter that on TaxSlayer and it said, hey, they can't be born in the future.
On the question, on the question, if like the spouse can be claimed as a dependent on someone else's return, or even if the taxpayer can be claimed as a dependent, we don't have information about it, right?
Technically, no, but we have enough information here to know that they can't be claimed by anyone else. Because they're filing a married filing jointly return, and it is for a purpose other than just claiming withholdings. One of the key requirements for being claimed is that the person you are trying to claim cannot be married, filing a joint return, unless that joint return is only to claim a refund of income tax withheld or estimated tax paid. It's a good question. I didn't give much info about that because the presumption here is, yeah, at that point, they have a very clear life of their own with multi-tens of thousands of dollars of income. Very unlikely that, it is very unlikely anyone would ever be able to claim them again. But technically speaking, we do have barely enough information to tell.
Still have son and daughter, not child. On the drop down, they have still have son and daughter.
Yes.
Even though it's child.
Yep, even though it says child. I don't know whether they would change that on this,
Right.
but again, like the names don't automatically match up. Ben is labeled as Ben on the intake sheet, but
Correct.
Benjamin.
Yes, sir.
Date of birth, social security number. They are a US citizen, relationship son. And then just take that special note here. If this dependent was born in 2024, you must select 12 months. So one of the criteria for dependency is that residency test, right? The child must have lived with you for more than half of the year. Well, Ben didn't live with them for more than half the year. He wasn't living for more than half the year. But again, when there's footnotes, always double check the footnotes. There are exceptions for temporary absences, children who were born or died during the year, and children of divorced or separated parents, or parents who live apart, and kidnapped children. By the way, the one thing that can override these rules is divorce decrees. Divorce decrees can just straight up set the rules of who gets to claim whom on what years. And it's basically up to the imagination of the judge as to how creative those things could get. Common ones you'll see are, no matter what, the mother's always able to claim the dependency for this child. Or the mother claims dependency on odd years and the father claims dependency on even years. Or as long as the father is paying alimony, then he gets to claim the dependency, or something like that. You have to ask the taxpayer whether any of that applies. If they're a divorcee, then check. If they're a divorcee with a kid, check. Does the term of the divorce have anything to do with your ability to claim dependency on the kid? Sometimes it will, sometimes it won't. It's all dependent on how that divorce decree worked out. Who hired a better lawyer? But if they're born or died during the year, then you can conceptualize it as they've been living with the taxpayer their entire life.
Gestation.
Yep. And all these things do not apply to Ben, so you can click continue. And you get one of those multiple entry menus. If you need to add multiple dependents, you can add more. This is also where you can add non-dependents who qualify you for head of household, because that is a possible thing. Very rare, but technically possible, because qualifying person for dependency is not the same as qualifying person for head of household. But that's all we need to do for basic information, so let's go over the W-2s. We got 2 Form W-2s here. We'll start with Barbara's. And you notice now that we have a taxpayer and a spouse, we have to select whose W-2 is this, who owns this form, or who received this form. So it's Barbara, which we have configured as the spouse on this return. On page 19, we have a W-2 that is very much modeled after you will see a Louisville ISD. If you work at the Louisville Public Library VITA site, you will almost guaranteed see a Louisville ISD W-2 that looks almost exactly like this. It's the spouse's W-2. It has a standard W-2. Oh, I forgot. This year they actually added the ability to change the employee's name. So employer identification number is 756001955. That is actually Louisville ISD's EIN. And when you enter it, I think it should pop up Louisville ISD. If not, then just repair it.
So you're leaving it, Barbara Powell?
No, I'm gonna change that
Okay.
when we get to it.
Because I can't.
Can't?
So Barbara's address on the W-2 is different from on the intake form?
Yep. Welcome to realistic tax returns. Louisville ISD's HR department has not updated her mailing address. For quite a while, actually. And yeah, you're right. This is actually not changeable. So, okay.
Okay, so it's not just me.
Nope.
Okay, thank you.
Nope. It is acting the way that I expected it to, which is you can't change the employer's name, the employee's name. But yes, you notice the address is different. And that is incredibly common. It is very common for employers to have the wrong address on their W-2s. In this particular case, they're still remembering Barbara's apartment when she started working with them. So she started living in Denton because that's where Bobby was going to school. But remember that what we're doing is we're duplicating the W-2 as closely as possible in order to send a copy to the IRS. So in this case, we add in that completely wrong address.
Oh, so we should be using the wrong address.
Yep,
Oh.
we should be using 3232 North Locust Street, apartment 1922. Seven 6201, that'll auto load Denton. It is correct. Then, box 1, wages, tips, other compensation, 37835. Box 2, federal income tax withholding, 3284. Box 3, social security wages, zip zero zilch. Box 4, social security tax withheld, the same, 0, big fat goose egg. Why is that? She's a teacher. Yeah. Anyone who's involved in it's teachers especially who are involved in Texas education, they do not pay into federal Social Security. Texas teachers pay into the TRS system instead. Texas retirement, or is it teacher's retirement? It's one or the other, but yeah, Texas teachers don't pay into Social Security. So this is, again, this is a weird W-2, but you will absolutely see W-2s like this. Medicare, however, Texas has not done anything state-specific for that. But box 5 still shouldn't match what auto-populated. We need to put 39035 in box 5, which corresponds to 566 in box 6.
So then listed on the box 14 for her W2, what is that?
We'll get to that in a second. So box 12A and 12B have codes and amounts. So just duplicate those codes and amounts. Code Delta Delta is employer-sponsored healthcare. That's the cost the employer is paying for someone's healthcare or their health insurance premiums. In this case, a fairly reasonable $7,000. I wish healthcare was only that expensive. Then there is code Delta for voluntary contributions to a retirement fund or retirement account. $1,200 there, so she's putting away $100 a month. Retirement plan is checked in box 13. And then you noted that there is a strange code in box 14 where we don't have that as an option in the dropdown. And that's correct. We have to select other not listed here because we don't have UA listed there as an option. But the amount is 240, so we enter that there. And if you're wondering what that stands for, that is exactly how it will appear. That is exactly how Louisville ISD's HR notates when one of their employees gives $10 a paycheck out of their paycheck to United Way as part of a workplace campaign.
Is that Louisville ISD specific, or is
Yes.
that, okay.
That is
So it
Louisville
might be
ISD
designated
specific.
differently on another employer.
Correct.
Okay.
Not every employer does the same thing, but that is explicitly, I've seen that on a Louisville ISD teacher's
Thank you.
paycheck. So we have to select other not listed here, enter the amount 240, and then that's that. You can hit save and enter another in order to tap in Bobby's W-2. So whose form is this? It's the taxpayers. So we enter, it's a standard W-2, we can leave that checked. If you ever get a corrected W-2 or a substitute W-2, this is where you can change that marking. Those are pretty rare. Companies are very loath to correct their W-2s. And substitute W-2s are to be avoided if at all possible, but we do file them towards the end of the tax season.
Is that just a replacement, or what is the substitute?
So when someone doesn't have a W-2, knows they should be getting one, but the employer just will not give it to them, or their employer has just gone completely AWOL, which we've definitely seen that happen before, then we can reconstruct a W-2 using someone's last pay stub. It is to be avoided if at all possible because it causes a lot of headaches, and I'm pretty sure that's one of the cases where you have to mail in the tax return. But it is possible. In this case though, just a standard W-2, thank goodness. Employer identification number 75214-8799er. Should pull up Freedonian Public Works. This company is fake. Address in Louisville has Bobby Bull's name and address. Wages, tips, other compensation 5258. Box 2, federal income tax withholding 385. Box 3, Social Security wages 5842. All this is just duplicated exactly as it appears.
Do we have to fill out the Texas stuff even though there's no taxes?
Yes, to the extent that we can. Boxes 12 and 13. 12A has code Delta 4584. 13 has retirement plan checked. Nothing in box 14, but then all of a sudden, even though we are in Texas, we still have state tax information. And you're probably asking, why is there state tax information going on here? Like, that makes no sense. What's going on? Oh, a wasp is going on in my front door right now. So, yeah, so what's going on here? The thing that's happened is Freedonian Public Works works across multiple states. They have employees in multiple states. And because of that, their payroll system is just assuming that it needs to add state tax information for everyone, because the majority of US states do have a state income tax. So Texas is one of the outliers. You will see plenty of W-2s that come looking like this, where they have state tax information, they don't have a state number, but they do have state wages, local wages, etc. And because we're trying to reproduce the W-2 as exactly as possible, we gotta add in that stuff. Even though it makes no sense, even though it's completely useless for us, we still have to add it in.
It's just so it matches up with what the IRS has on file. Okay.
Precisely. And that does present a problem because TaxSlayer sees state information and it will not let us pass without saying a state ID number of some kind. And for this, we're not given a state ID number. So the closest thing we have is the EIN. Go ahead and just tap in that.
So you would put the EIN in there?
Yep. And then once you've done that, then you have recreated the W-2 as best we can, and we can continue. This is why I would create these sample scenarios locally. I want you to see what real W-2s look like. I want you to see and understand how you have to work around companies doing weird things. Sometimes with good reason, sometimes not so much. And at that point, we've entered the two W-2s, so we would ask them, cool, we've entered the two, do you have any other W-2s to add? Performing our due diligence. If they say no, we can generally take the taxpayer at their word unless we suspect that there's some duplicity going on. So we move on. They don't have any other income to report. So now we can start in on other stuff. For instance, the next form that's coming up is Barbara's 1098E from All Devouring Black Hole Loan Shark Incorporated. And how do you enter that? Well, what we're looking for is, this is payment of student loan interest by the student to the lender. So we can look up student loan, and it'll say Form 1098E, student loan interest statement. And we can click that. And it will take you to one of the simplest screens in TaxSlayer. Like, we get this whole complicated tax form, and TaxSlayer just says, no, none of that's important. How much are they paying interest? $1,285. And that'll change the little preview in the upper left, which I should note that this little preview shows up in the upper left, showing how much the computer is currently calculating, based on the information you have added, the refund to be, or the amount due. It's going to be different for y'all than it is for me.
It is different for me.
Sometimes taxpayers will start looking at this and wondering how much they're going to get, and freaking out if the number goes down, and freaking out if the number goes up. And this is a good place for you to just remind them whenever they notice. It's a good place to, you can either, whoops, that's not, okay, come on, back up. This is a good place to remind them that number is not final until we have finished inputting all the information. So they should just ignore that number until you say it's time to pay attention to it. So we've added in the student loan interest. Now let's go ahead and the next form is the education credit, or the tuition statement. And you cannot enter the tuition statement yet, because you have not finished the rest of the form yet. Remember that tuition, actually remember, I've only mentioned it once. Education expenses, post-secondary education expenses, can show up in two different places on the tax form. It can show up in the non-refundable credits, and it can show up in the refundable credits. And it acts differently, it lends different results depending on which one you pick. Which means that this is one of those scenarios where there are multiple correct answers in terms of what is filing an accurate tax return. There are multiple ways to do that. So we get the chance to figure out which is the most beneficial way to do that for this taxpayer. Now, in this case, Bobby only qualifies for one of the two credits, but whenever you see a 1098-T, get the entire rest of the return set first, and then go to the 1098-T. That way you can figure out which is the best option. So we're gonna hold on to that, and instead we're gonna go back to their interview sheet, because there are a few things left for us to handle. Specifically, there is Barbara's school supplies. She has mentioned that she has receipts back at home for far more than she's allowed to claim for the school supplies that she buys for her classroom, which is true of every teacher. Where do you enter that? Well, under deductions for some reason, and then under adjustments, as soon as this loads. Under adjustments, there will be a section that says educator expenses. And here there are some criteria to look at. So if you're interested in what the specific criteria are, there's a section of the 4012 that actually lists what criteria do you have to meet in order to claim educator expenses. And it's you have to be essentially a full-time teacher in a primary or secondary school in K through 12, full-time teacher in the classroom. And then you can claim up to $300, which is insultingly low, but it also does mean that it's really easy to enter this because all you gotta say is, are you a teacher? Yes. Do you work full-time? Yes. Are you in a K through 12? Yes, 300. You're not gonna find a teacher who isn't spending more than $300 on their classroom. Just make sure you enter it under the spouse's educator expenses since it's hers, not his. Once you have entered that, now, hold on, no, we need to check health insurance.
But doesn't Bobby have a bookstore?
That's education expenses, not educator expenses. And that is something we'll have to wait until we can get to the education expenses. Which we have to set one more thing first, which is double check that they don't have Affordable Care Act stuff to worry about.
Covered under her.
Bobby says everyone's under her health insurance through the school district, which is not going to be Marketplace. And we see evidence of it from her pay stub, the Delta payment for almost $7,000. So we can say no, continue, and now we can we can enter the form number 1098T. Tuition statement. And that will take us to the education credits. And it's going to start with, I think it starts with, did the taxpayer receive Form 1098T from the educational institution for 2024? The answer is yes. Did you receive one from the institution in 2023 with box 7 checked? Well, what's that asking about? It's asking about, did he pay in 2023 for the 2024 spring semester?
No.
And he did not. Otherwise, he should have the form with him. So you can hit continue off of that, and it'll ask, okay, cool, you have a 1098T from an educational institution. Please indicate which institution we're talking about. So institution name, University of North Texas, address, as given, zip code, city, state, employer identification number. This is all real information. And then we have a section here for tuition paid, grants and scholarships, and other qualified expenses. So tuition paid, you can take that right off of box 1, payments received for qualified tuition and related expenses. And then grants and scholarships, you can take that just right off of the grants and scholarships or grants box. Now this is where I need to step outside of this program a little and talk about the 1098T in general. Expenses and scholarships can show up in a couple different ways, or in a couple different combinations. Sometimes people will only have expenses on their 1098T. That's simple enough to enter. It's just going to be the tuition paid plus other qualified expenses, no scholarships. If they have scholarships and grants, normally, generally speaking, what you do is you subtract scholarships and grants from the payments received for qualified tuition, normally. If there are more scholarships and grants than there are tuition and other qualified expenses, then they don't have education expenses, they have income in the form of scholarships and grants. It's pretty rare, but it can happen. If they are claimable as a dependent by their parents, which you'll see a lot of, especially if you're at Denton North Branch Library, lots of students come to that one. Some very strange things can happen because all the expenses go to the parents because they're claiming the kid as a dependent. All the scholarship income can only go to the kid. But you can cancel out scholarship income with expenses, even though they apply to two different returns. It can get real weird. There can be certain circumstances where it is more beneficial to the family as a whole if the student doesn't cancel out any of their income with expenses and instead just takes all of the income as income.
Would it be earned income because he earned the grant? Or would it be other income?
It counts as counts as unearned income.
Okay.
But the trick is, oftentimes the students will not have that much, if any, other income besides their scholarships. And so sometimes it is better for the parents to be able to claim $4,000 of American Opportunity Credit and their kids take on all the income, which doesn't cross over the standard deduction and therefore just vanishes.
So now that the NCAA allows student athletes to get income, and the Texas Tech, based on somebody that I know at Texas Tech, the average student's income is $75,000, or the base income is $75,000 for a student. Football player, we're going to start seeing that this year.
In which case we would say, hey, you make too much money.
Okay.
Yep.
That's new this year.
And it also causes, that could potentially cause some headaches. But
Okay.
All that to say, the 1098T can get a little bit complicated, more complicated than what this formula likes to pretend. So I highly recommend, if you're interested in looking at that information, check the publication 970. It's not updated for 2024 just yet, but it is everything you need to know about how to address education expenses.
So
Yes.
quick question. Are you saying that everyone on the that is filing along with the taxpayer, each of them get a standard deduction of whatever $1,300 or $13,000 or $14,000?
No. Yes, I would like to renew my session. Every tax return gets one standard deduction. The thing that I'm saying is that income only ever goes to the person to whom it was paid. You can't put anyone's income on someone else's tax return. The students have a different tax return than their parents who are claiming the students. And so the student's standard deduction is separate from their parents' standard deduction. It's on their own tax return that is marked as being able to be claimed by someone else. But it's their income on their tax return.
Okay, so if someone can be claimed as a dependent, they can still file a return separately.
Yes. Like Andy, the very first return, the previous return we did, that's someone with their own income able to be claimed by someone else, filing to get their $40 of withholding back.
I mean, in that case, her father doesn't claim her as a dependent on his tax return. But in the case that you're saying, expenses of the child, if they come to the parent, then that means the parent is claiming them as a dependent on their tax return, and that the child is filing a separate tax return.
Other way around. When a child is claimed by when a child can be claimed by their parents, their post-secondary education expenses are the parents' expenses because they are being claimed as a dependent. If the child was not being claimed as a dependent, the education expenses go to the child. So essentially, you can think of it as education expenses always go with the dependency. Okay. Definitely look at the publication 970. It's very instructive. All right, so this is a relatively benign, relatively simple 1098-T. We can enter the tuition paid, we can enter the grants and scholarships. It'll automatically calculate the appropriate amount of expenses to take. Now comes the question of other qualified expenses, and I'm sure you're asking, why didn't I add in Bobby's books into the other qualified expenses? The reason is we need to look at what are qualified expenses for the type of education credit that he can get. So there are two types of education credits out there. There is the American Opportunity Credit, which can be conceptualized as this is your undergrad credit. That's a very colloquial definition of it, but it applies to the first 4 years of post-secondary education, and it can only be claimed for 4 tax years. It is very clearly aimed at undergrads. It is a very powerful credit. A portion of it is refundable, and it is pretty efficient in terms of expenses to benefit. It does require that the student must be pursuing a degree. So if someone's just taking a community college course in order to learn QuickBooks or something, that does not qualify for American Opportunity Credit. The student has to be enrolled at least half-time for 1 academic period. So again, if you're just taking 1 class, it doesn't count. You have to be taking a couple. They have a felony drug conviction test. You cannot have been convicted of a felony for possessing or distributing a controlled substance in order to get the American Opportunity Credit. And then there's qualified expenses, which we'll get to in a little bit. Lifetime Learning Credit is a little different. It is entirely non-refundable. It is a little more limited in the amount of credit you can get, but it is not limited in terms of how many years you can claim it or what years of post-secondary education qualify. So I am currently going back to UNT for my master's degree. I have definitely completed my first 4 years of post-secondary education already, but I can still claim the lifetime learning credit come tax time. Available for an unlimited number of tax years. You don't have to be degree pursuing. So if I was just taking an accounting class at NCTC, then I could still claim lifetime learning credit. Here's where the big difference comes in. American Opportunity Credit says that qualified expenses are tuition, required enrollment fees, and course materials that the student needs for a course of study, whether or not the materials are bought at the educational institution as a condition of enrollment or attendance. In other words, I buy a discounted textbook for $50 off of some shady eBay dealer who has a bunch of it and it comes in and it smells of crime and whatnot, but it technically counts. That still counts for American Opportunity Credit as a qualified expense. It would not count under lifetime learning credit. My course syllabus says a laptop is required. I buy a new laptop. Under American Opportunity Credit, that counts as an education expense because my syllabus said you require a laptop. Under lifetime learning, that is not a qualified expense. Books or textbooks bought straight from the school. If I buy it from the school, like I'm paying the school, that'll count for lifetime learning credit. Where did Bobby buy his books from?
UNT bookstore.
UNT bookstore. Sounds great, right? Perfect, lifetime learning credit.
School.
You went to UNT, yeah. That seems match made in heaven. Seems to be perfect. UNT bookstore. Look at that URL. BN College. It's got the university logo plastered everywhere. It's called the UNT bookstore. It is not actually UNT. It is Barnes and Noble.
Dun, dun, dun.
His books bought at the UNT official bookstore do not qualify for lifetime learning credit.
Wow.
How did you get that it was Barnes and Noble?
I'm sorry, what was that?
How did you see, where did you see that it was Barnes and Nobles?
They've hidden it much more on the new website, but this is BNC, Barnes and Noble College. When you look at the privacy policy, it's going to talk about at Barnes and Noble Education, the UNT bookstore got contracted out to Barnes and Noble many, many years ago. This is a common thing that catches people off guard all the time. We are not paying directly to UNT, which is the criteria for lifetime learning credit. And this is why I include this as an example, because you will see this. You absolutely will see grad students coming in asking for their UNT bookstore expenses to be put on as education credits. But congratulations, now you know how to address that. It sucks, but now you know how to address that.
Buy that UNT coffee mug.
Nope. Under American Opportunity Credit, you can as long as it's required in the syllabus.
I gotcha. Well, coffee's required, so therefore.
Coffee is required, yes, but is the mug required? So that is why I don't have other qualified expenses there. So I'm going to hit continue here. And that says, okay, cool. So there's $1,820 of qualified expenses for UNT. Click continue again. It's going to ask a whole bunch of eligibility questions about the American Opportunity Credit. We know he's not qualified, but answer the questions and then hit continue. And it will give you, this is a huge improvement over the way it used to work. It will give you, hey, this is what this credit looks like under each thing.
It's already been claimed. Was a student enrolled at least half-time, at least one academic period? Yes.
But lifetime learning credit is our only option. Unless he doesn't want to claim the credit. He can always choose not to claim the credit, but there's no benefit for doing that, so why would he? Click continue, and that is that is the completed return. We still have to explain how the return works to him. We still have to do the e-filing stuff, but I've shown you how that works already, and we are a bit behind schedule, so I apologize for keeping you all late. But that is 2 basic returns for you. And that is also the end of today's planned studies. So you do have some homework. The homework is look at the basic scenario. Look at the next scenario. It should be advanced. I don't know why I still said basic on that. Look at scenario 3, Cat Castillo and the cascading dependency. What page is that on? It is on page 23. An intake volunteer introduces you to Cat Castillo, a single mother caring for her child and aging parent. Go ahead and prepare that to the best of your ability for next time, whether you're going to show up next Tuesday or next Saturday. And we will go over that as our first thing in that particular training session. So, last call. Anything you guys want to talk about over anything we've covered today? Any questions you got?
That's the only homework though?
That's the only homework. Yep. You can take a look at the 4th scenario if you want, but that is intentionally supposed to be a doozy of a scenario. Danny Dumas and the prior year complications.
And then is there any more of these type of examples like online or anything like that?
You may be able to find some sample scenarios that have been built by other VITA programs, but these are the 4 that I created locally. Yeah. I wish I had time to create as many scenarios as you wanted to practice. But sadly, my time is limited by, if I spend too much time on VITA, my CFO will get very upset with me.
You do nice work.
Definitely do.
Thank you. I appreciate that.
I've been to a couple of these, so.
I mean, it's not boring. I've actually tried reading this before and I was like, I can't do this. So this is really helpful. Yeah.
Good. Learn by doing is kind of the only way to make taxes easily understandable for us. I've tried the book learning and I just, no. So yeah, you have your homework assignment. I'm going to stick around here for a little longer just to chat. So if you want to, or just to work on some stuff, and organize and clean up. But if you want to stick around and talk, then I'm more than happy to. Otherwise, you are free to go.
Thanks, Teddy.
Thank you. Thank you. Thank you all for spending a Saturday with me.
Default still in the no possibility? But different print copy? Yeah.
Yes. Yes, we are going to get print copies of the 412. It's just that they haven't arrived yet.
You're a teacher, right? Yeah, you're a teacher. You know,
I play one.
students have different type of, whether it be tactile, verbal, visual,
Yes.
they tend to prefer the paper.
Physical.
So, it's funny because a lot of people in this day and age don't keep receipts anymore. I'm a paper guy and I can reconcile everything on Quicken. And I'm not saying anything suspicious about the restaurant industry, but I found 3 times this year.
Let me stop the recordings here.
Ever in favor of the server. The tip was 10 or 20 bucks more, but it falls within the scope of, I went out to eat, and yeah, $200 is approximately what I paid, so I don't paper. But anyway,
I would believe it.
I don't know whether that's becoming a trend or whether that's something new.
I was just gonna say I'm a delivery driver, and so we have like the merchant copies that we get their signature on.
Yeah.
And I was just gonna say that, yeah, I've seen other drivers, they might fudge a number or two.
Okay.
I of course don't, because I'm ethical, but they,
Right,
yeah.
okay, so
It's a good
The
habit. we
windows,
have.
the windows open is slit for that, so it, sometime blows in.
That's good to think about.
But I'm a paper guy.
Yeah, I am as well.
I'm an old guy.
You are certainly not alone in preferring to have the physical copy of the 4012. I make an order every year specifically because I know we have plenty of volunteers who like having the
And
physical
I like
copy.
the tabs, it's separated, it's just, I like the Control F too,
Mhm.
when I'm in the real world, but
Yeah. It's nice having a physical one.
I thank you. And like I said, you deliver very well.
Definitely.
So
You'd
much
be a
of it,
great
so much,
teacher.
knowledge and wisdom are two different things. Humanity acquires knowledge so much faster than it acquires wisdom. You acquire it. So, this might be Joanne's. I think this is mine. My wife just gave this to me as I walked out the door, so I didn't even use it, 'cause I don't know how to use it. Hey, nice to meet you.
Nice to meet you as well. You have a good one.
Yeah.